Hey, crypto family. So, we have some exciting news topics to talk about today, but first, let's go ahead and cover the market. So, market cap right now is over 200 billion at $203 billion. We have Bitcoin really stagnant right now around that $6,500 level. It's kind of stayed there the past couple of days. Ethereum is actually doing really good, up 2.5% to $223. So, that's a big effect of the shorts that were piled on over the past couple of weeks. So, you can see some of them are getting squeezed right now. And again, we'll have to watch out for Ethereum to see if it crashes down again because there are still a lot of shorts on it. And then most of the other altcoins, again, are up or down a couple percent. So not too much going on in the market right now. I mentioned in my last stream that the 200-day moving average on the 4-hour chart is what we're looking for Bitcoin as resistance. So it's at about $6,600. And as you can see, Bitcoin has not been able to go over that. If it does break through that 200-day moving average, then again, we're looking at the 128-day at about 6,700 to 6,750. So those are the levels we're looking out for here. Again, keeping that 50-day moving average as support, so we're going to look at about 6,350 to 6,400. So if we can keep those levels, that'll be bullish for Bitcoin. But again, if we break through these levels down, then I see us going, potentially on this previous 6,100 support and breaking even further to the downside. So again, we'll have to keep an eye on that and see what happens. But one of the first articles I want to cover today, it says Goldman Sachs, Morgan Stanley, Citigroup, and New York Stock Exchange owner prepares to back Bitcoin and cryptocurrency. So this article covers basically a lot of banks that are starting to get into cryptocurrencies and exactly what projects they're working on behind the scenes. So it says, it's getting harder for the naysayers to pretend Wall Street's biggest players will avoid bringing Bitcoin and cryptocurrency to their clients. Goldman Sachs, Morgan Stanley, Citigroup, and the owner of the New York Stock Exchange, parentheses ICE, are all reportedly gearing up to launch Bitcoin products and services for institutional investors. So this is huge. I mean, these are some of the biggest banks in the world, and they are all working to launch Bitcoin products for their institutional investors. And as I've been mentioning, institutional investors are the way that we're going to gain that mainstream adoption, and it's going to have, that boom that we need for Bitcoin to climb higher in price. Because retail investors do make up a big part of it, but the big money is all in the institutions, which probably aren't going to get in the market for another year or two at least. But it's good to see that these banks are working so that they can expedite that process. And it says here, Goldman, one of the largest investment banks in the world, gave cryptocurrencies a major Wall Street boost earlier this month when its chief financial officer, Mark Chavez, affirmed the development of a Bitcoin derivative. And then he also called reports that Goldman is abandoning plans to open a crypto trading desk, quote, fake news. So again, you have Goldman Sachs creating a Bitcoin derivative, which is, another way for investors to have exposure to Bitcoin without actually having to own it. So I thought this was great. They're really starting to get, trying to get those safety and those custody solutions available for investors so that, they feel safe with their funds. And then also talks about Citigroup is also moving into crypto. And it says its angle is a digital asset receipt, DAR, an instrument that allows for perhaps the most direct way to invest in Bitcoin without having to own the underlying asset currently. Basically, what a DAR is it allows U.S. investors to invest in foreign stocks that are in regulated markets. It acts like an American depository receipt. So it effectively gives Wall Street investors a way into Bitcoin with less risk. So again, they're trying to make this as safe as possible and have their clients have the least amount of exposure to Bitcoin while still being invested in it. Then it talks about Morgan Stanley is the latest to jump on the bandwagon. It says investors will be able to go long or short using the so-called price return swaps, and Morgan Stanley will charge a spread for each transaction. And so that's huge. And then the biggest one it talks about that I liked here is from the Intercontinental Exchange, ICE, which is the owner of the New York Stock Exchange. And basically it says ICE tapped partners Microsoft, Starbucks, and Boston Consulting Group to launch Bakkt, a Bitcoin exchange that's scheduled to launch in November subject to regulatory approval. And the biggest thing I like about Bakkt, it says it's bringing the futures market to BTC should have had from day one. And they're actually settled in Bitcoin instead of cash settled. So I don't know if you know how big that is, but for a futures market to actually be settled in Bitcoin, that means it says here that they will receive their Bitcoin one day after they purchase that futures contract. So they're actually having to purchase Bitcoin. It's not just cash settled. So they're technically there could be less manipulation. Not to say that there will be, but it's better that they actually own the Bitcoin, so it actually provides some volatility and some positive price action in Bitcoin. So I thought this was huge, and it says it's actually going to be set to come out in November, which, I mean, if this thing comes out in November, then that's going to be big. That's kind of, another ripple in the cryptocurrency market, so to speak. So again, it's going to be interesting to see when this comes out and exactly how much of an impact it is. But nonetheless, all these banks getting into cryptocurrencies, I mean, they wouldn't get in it if they didn't think there wasn't a future. So again, that's some big news there, and I just wanted to bring that up. Now, second news article today is from CoinDesk, and it talks about Coinbase hiring 100 people in Wall Street crypto push. And it says, the crypto industry Coinbase has aggressive growth plans for its newly opened New York office, which caters to institutional clients. And it says they plan to expand operation to 150 employees next year from 20 currently. So basically, the biggest thing here, it says, quote, when we saw the market begin to correct, which we all expected, institutions didn't lose interest. It was exactly, and it says Adam White, general manager of Coinbase, told it was exactly the opposite. So people actually saw it as an opportunity to enter when things weren't too frothy, quote unquote. And if you think about it, everyone in Wall Street, they're investors and they're smart traders. So they're not going to want to buy something when it's at its all-time high. And for that to have a pullback, and people are actually, biting at the lip to buy Bitcoin when it's at these low prices, I mean, that's smart investors, and that's actually what the real traders do. You buy low and sell high. I'm sure you've heard that quote from Warren Buffett. And again, some of the biggest people here are starting to get into the cryptocurrency market. So I thought this was great when I was talking about institutions and, everyone's starting wanting to get in. And one of the biggest things here is Coinbase talks about expanding. It says Coinbase as a company has been on a hiring spree all throughout the 2018 bear market and now has more than 500 employees worldwide. And it says they're looking to light up more countries and more fiat rails with an eye on expansion into Asia and Latin America pretty quickly. So Coinbase isn't slowing down here. And again, the people at Coinbase know stuff, and they have ties to a lot of different people in Wall Street and around the world. And you think they would start making, hiring all these different people, expanding to these different countries if they didn't think Bitcoin would be here long term. I mean, this is a lot of bullish news. And, while Bitcoin may still be in a bear market, I think we're definitely going to have an upswing, pretty soon, within the next couple of months, the beginning of next year. So again, there's some good news, and just kind of reading between the lines, you can see the potential, and you can see exactly how good this is long term for cryptocurrencies. So I thought that was pretty good that they're expanding their operations. And last but not least, I'm sure a lot of you clicked on the video for this reason, is Tim Draper predicts crypto market cap of $80 trillion in the next 15 years. So Tim Draper, he made some big headlines last year when he predicted that Bitcoin would be $250,000 by 2022. And that was at a conference that was held, I believe it was either in New York or California. But he basically predicted, Bitcoin's going to reach $250,000 in 4 years, and that caught a lot of people by surprise. And basically his reasoning for this is, he said, Draper argued that the significant slide in the cryptocurrency market in recent months is attributed to people who have not adopted digital currencies as a new asset class. Draper stated that once people become more familiar with the technology, it would transform many important industries globally. He says, quote, I think it's going to have such a transformative effect on industries that we've never even imagined would be transformable. The internet went after industries that were $10 to $100 billion markets. Cryptocurrency will go after $1 trillion markets. These are finance, healthcare, insurance, banking, and investment banking, and governments. So he makes some great points there. I mean, all these different companies in these markets, blockchain technology is going to transform these markets, for the better. I mean, just seeing what blockchain technology has done so far, it's minuscule to what it's going to do. And there's so much that can be improved in all these markets. And he's so right that, reaching into these $1 trillion markets, there's a ton of potential for cryptocurrencies. And then he just talks about Barron's reported that the Russell 3000 index, which accounts for 98% of the entire U.S. stock market, was worth $30 trillion. The staggering amount of money followed a successful year in 2017, in which the market experienced 22% returns. And he also mentions, Draper mentioned, quote, the internet started in the same way. It came in big waves and kind of came crashing down. The next wave comes concentrated but much bigger. And I suspect the same thing will go with Bitcoin. So again, it's just the market's go in waves, and with new technology, it's not adopted right away. It takes some time, just like the internet. And I think, he's right on with saying that there's a ton of growth for cryptocurrencies. I don't know if it'll be $80 trillion worth in the next 15 years, but it's definite possibility. So again, always something to keep in mind and see different points of view. So I thought these articles would be pretty useful today. Just wanted to bring that to y'all's attention and hope y'all enjoyed it. If you did, please like, comment, and subscribe if you haven't. And until next time, thanks for watching.